Hello, everyone. This is Rachel Dashiell from Schwab Coaching. I'm your newest coach here. Today, we are going to cover a few high probability trade setups on price patterns and show you how to analyze or visualize some of these trades with your risk. So we have Barb in the chat today. Please chat in your questions and comments in there throughout. If there's a survey link dropped in there, please fill that out as well with your honest feedback. Now, Barb and I are on X. We post a lot of charts, different ideas, things like that. So please follow us at Barb Armstrong CS and Rachel CS. And please subscribe to us on Trader Talk Schwab Coaching here on YouTube. Now, before we get started, let's hop into our disclosures and then we'll hit the agenda. So as far as our disclosures, options carry a high level risk and are not suitable for all investors. The information we're going to cover here is for general informational purposes only and should not be considered an individualized recommendation or any type of advice. We'll discuss a lot of technical analysis today, but other approaches, including fundamental analysis, may assert different views. And lastly, Schwab doesn't recommend the use of technical analysis as a sole means of investment research. So let's just kind of dive into what the agenda looks like today. We're going to cover an announcement first of some of the upcoming events that we have. We're going to do a market overview. We're going to review some of the past trades that we've placed over the last couple of weeks in this webcast. We're going to look for new example trades. We're going to go through how to manage those trades as well. So starting with our announcement here, we have the upcoming workshops and market drive events listed on this page. First comes up with Anaheim Market Drive next month, November 22nd. Then we have a 2-day trading workshop, which is technical analysis and option strategies in Houston in December. I will be at that one, so if you're going to be there, definitely say hi, throw a holler in the chat, and let me know if you're going to be there. And then our last one of the year is going to be Miami Advanced Options, so it's going to build off of what you're going to learn in some of our options webcasts or that trading workshop as well, and just get into more advanced spreads and things like that. So let's switch gears and start with our markets overview here, first by looking at the Dow. So the Dow actually was able to climb higher and make new all-time highs actually yesterday after really rebounding from the 50-day moving average and then bouncing up back and forth between that 20-day and 50-day. And then over the last few days, it actually had this 3 soldiers pattern where we have 3 big green candles in a row that form at the bottom of a trend. And we saw the trend has been down over the last couple weeks here. We saw that forming up higher, making that new all-time high. And then today, just kind of pulling back just a little, about 0.5% there. So that near-term support that a lot of traders will be watching is likely that 20-day simple moving average right around that 46,370 level or so. Now let's take a look at the NASDAQ composite. We did not make a new high in the NASDAQ composite here like the Dow did. We had a little bit of an inside day yesterday, even a Harami candle, which signaled there could be a pause in that short-term uptrend. There could be a little indecision there. And then we're seeing that reversal today that's happening where we're battling again with that 20-day simple moving average. I would say that next level of support, if we continue that move tomorrow, that next level of support would probably be right around this horizontal zone, right around 22,200. That's also where our 50-day simple moving average is as well. So things that traders may keep an eye on as they're managing positions there, especially in the technology space. Now let's pivot gears to the S&P 500. Now, similar to what we saw in the NASDAQ, we saw more of a doji candle yesterday, which again can signal that pause or indecision of the trend. It can even indicate a reversal if it shows up at a certain polarity level. And in this case, it actually printed right near that resistance that we saw. So that could have been that indicator that today we may have seen a little bit of a reversal. And that's, I think, what we're seeing there. Just again, battling with that 20-day simple moving average, and that slope is just getting flatter and flatter. So I would say if we break through this, again, we'd be looking for that 50-day simple moving average right around 65.83 or so. Now let's go to the Russell real quick. Let's look at the Russell. Same kind of thing that we're seeing. We saw a failure of move to new highs. We're now seeing a break of that 20-period simple moving average. Now, this other level that I drew in here may act as support because those were the former highs from late last year, actually. So we took all year to chug higher and march out of this pattern. We've tested the 20-period moving average a few times, kind of dipped below that horizontal support. But I would say, I mean, that's kind of where it's hanging at right now. That would be that next level that I would look for before that 50-day simple moving average right below it, which is actually kind of coming at the same level as we saw that price touched a few times here, right around like 2392, 2400 in that little range there. Now, something notable, I think, as well is while the VIX has had a little bit of a pullback, it is actually catching support at its 20-day simple moving average. It's under its, I believe it's under its 200-period simple moving average. Let's just throw that on there. Oh, now it's climbing back up above it. So it's moving back above its 200-period simple moving average, bouncing off of that 20-period simple moving average. And both of these shorter term moving averages are actually sloping up, showing that we could be in a little bit of an uptrend here. So this will kind of be something interesting to watch now that we're real close to that 20 level, which is indicative of close to percentage and a quarter point move in the S&P 500. So with this bounce in the VIX index, I think traders will be expecting a little volatility here coming up. And it makes sense. We're entering into a patch of earnings season. So there's some uncertainty here taking place as we just kind of await some of those numbers. Now let's go into some of the previous trades that we've had the last couple weeks. Now, one of them being Amgen. So I'm going to click on that over here. So if you guys remember this, the other week we saw this flag pattern here, and we actually took a trade on a breakout of the flag pattern. And the trade that we took was this 19th of December 300 strike call. We went long a call. We're down a little bit on it right now, about $255. But the overall trend, and it's probably because we've had a little bit of a pullback just the last couple days, but we still are on the upside of that flag pattern, still looking for that bullish continuation. And we have about 2 months on that, so we still have a ton of time. Our stop order and our profit taking order is still in place there. So that's that one trade. Now CCL, let's go back to that one. So CCL, we traded in a little bit of this range here with the support bounce. If you remember last week, we saw this bullish engulfing candle at support, which was also a hold. And then after our trade was placed, with our trade being placed, we put our stop right at the low of that breakout candle or that bounce candle. And we saw the previous, or I guess the days following, we saw a little bit of a touchback again towards support before moving higher. So luckily our stop wasn't too tight in place where it stopped us out. We actually were a little bit above that. But now we've had a break above not only the 20-day simple moving average with a big power move yesterday, we actually saw a break in the 50-day simple moving average today and actually trading a little bit below that. We were just long 210 shares of the stock. So we don't have any time capping us or anything like that. And our idea was kind of looking to the upside of this range here. Now, CNP, center point. So remember, we were looking at this one as well. We called it either a cup and handle pattern, or we went with the other pattern that we were seeing, which was an ascending triangle pattern. We noticed that this was the neckline, old resistance, now new support. And we placed our stop right below this initial breakout candle where we first saw the breakout. In the last week or so, we saw a little bit of a dip back under. It didn't trigger our stop quite yet, but now we are trading above that. We were just long this stock. So this could be an opportunity to move up our stop a little bit to maybe that level of new support now, which is 39.36. So, which is actually right where that, the 20 period simple moving average is at well. So maybe I'll put it right at that level to just kind of move up our stop. So I'm going to click and drag this and just move it up to that level. And I'm going to hit send here. And that's going to move up our stop just to kind of protect. We're going to move up that stop with it. So now that we've managed our trades from last week, let's dive into a couple different price patterns that I've actually been looking at here in the near term. So the first one we're going to look at is CRM, so Salesforce. Now I'll pause for kind of a second here and let me know if you guys are seeing any price patterns that have taken place over a series of a couple months in this stock or the last few weeks. If you want to call that out in the chat and let me know what you're seeing, because I'll start drawing the pattern that I'm seeing on here at the chart at the same time. So if you see anything, call it out. But the first thing I'm going to call out is we had a break of both the 20 and the 50-day simple moving averages just the other day. Both of those averages are now turning up. The slope of the moving average can give us an indication of that trend change. Now that 200 period simple moving average is still down, but it's obviously more lagging. Ooh, and I see a couple of you mentioning a double bottom. Yes, it could be a potential double bottom. Maybe a bottom here and a bottom here with the neckline maybe around here. What I was actually kind of looking at, and I'll hide the moving averages to show you this a little bit clearer on the chart. I found support at the same level that many of you are probably watching, and I can make this support level or zone a little bit more clear. And then the next thing I noticed was we've had these lower highs taking place, and we had a breakthrough of those just the other day. We had a strong power move through that. That was that same candle that blasted through that 20 period and 50 period simple moving average. And then we had that strong continuation yesterday, a little bit of an inside day today, maybe showing a little bit of a pause. So to me, this looks a little bit like a long-term descending triangle pattern. So that's what I'm kind of seeing here taking place with CRM. And we're seeing obviously an upside break in that. So let's take a look at where that could put a possible price target here. So I'm going to draw this base of this triangle here. There we go. So that base is about a $66.52 move. So if we just kind of take that and move it over to that upside breakout that we saw now with a couple closes above it, that could put that next resistance level right around that 318 or so, which I find kind of interesting because that was actually old support with that double top pattern that we saw there. So if we look here from earlier this year, late into the year last year, we saw two tops being made in price. We saw this neckline forming. We had that break of support. So maybe this particular price pattern, because of that measured move, is kind of breaking up to that upside and running into that level of resistance there. So that could be kind of what I'm looking at here. So a couple things to keep in mind as we're kind of formulating a trade. Now, in this case, I'm looking at a little bit more of a bullish bias here. Now, the only thing with that is, now Salesforce is a higher price stock. We have about $6,400 in trade size for our account, and we're only going to risk about a little less than $1,300 in a trade. So I'm kind of keeping that in mind as I'm formulating what type of trade I want to possibly take here. The other thing that I noticed when looking at this chart was we have a little bit of elevated volatility levels here, and we have earnings coming up in a little less than a month and a half. So that's something that I'm also keeping in mind here. So for me, now I could buy a long call, but again, it runs the risk of paying a little bit too much with the volatility being a little bit elevated and then having to worry about that earnings coming up. But I'm still bullish on this trade. So I may take a what we call like a Vega negative trade to take advantage of maybe just the hot, elevated level of implied volatility. And I may just want to squeeze out some of the time that it's going to take. Now, I know this formation took about, I mean, 5 months or so to really form. So it could take 5 months to reach that level. But if we are still bullish in the near term, we want to take advantage of some of those things like time and implied volatility. I may look to actually maybe doing a short put spread on Salesforce just to kind of take a high probability type of trade in this scenario to take advantage of those factors. So I'm going to look at the trade tab here. And let's take a look at what we could be looking at. So in the near term, if we want to take advantage of time decay and really avoid any type of earnings, I want to look at 30 days out from expiration here. And I'm going to collapse my left sidebar so you can see the options chain a little bit better. But a couple things that we could look at are kind of our probabilities here by looking at delta. So if you're new to the Greeks or new to options, delta is going to tell you that probability of that option expiring in the money. It's also going to tell you how much move you're going to get on the option per dollar move in the stock. So if my bias is bullish and I just want a high probability trade to collect a little bit of premium here, I may look to buy the 250 strike and at the same time selling the 255 strike here. So all I did to build that was click on the asking price and held the control key on my keyboard, click the bid here to craft out this trade. This would give us an upside of close to a $200 credit, a downside of close to $300 on the downside. And the only way I'm kind of getting that calculation is taking the difference between the strikes minus what we're collecting on the premium. So I am going to just analyze this trade just to show you a little bit more at what I'm looking at the probabilities, looking at the risk on this trade. Now, if I go over to right click on the option, hit analyze trade like I just did there, it moves us over to the risk profile graph. Now, what this essentially does is it gives us the price of the stock on the bottom of the graph on the x-axis, and it gives us our profit and loss and break even on the y-axis here. And these two lines are technically just showing our risk and reward profiles for today, which is the purple line, and for expiration, which is the blue line when all time is kind of pulled out of that option now. Now what I can do is come to the right-hand side here, set these slices on my break-even points. So it's essentially going to set a price slice right here on the graph to where I'd need to be break-even on expiration, which is essentially just needing the stock to stay above 253.08 here. Now, once I do that, let me make this a little bit easier to see here. Switch this to a fixed scale. So it allows us to kind of slice through our probabilities, because this is what this entire background of this graph is giving us. It's giving us our probabilities of the stock being above or below certain levels, and putting a price slice through that really allows us to see that visually. So if we look to the right-hand side, that's telling us if we're putting our price slice on break even, that's telling us we have nearly a 76% chance that we could take profit on this trade, and about a 24% chance that we'd be taking a loss. Now, we talked a little bit before about how the most we can make on this trade is our credit, or net credit of what we're bringing in. So that's about $200. The most we can lose, since this is capped on the trade, it's a risk-defined trade here since you're buying one option and selling the other. That way you have the right and the obligation on each leg. that caps our downside to about 300. So we talked about our trade size and trade risk. We can risk roughly, I guess, $1,300 or so on this trade. So this is just an easy way to kind of calculate how many options trades I could possibly do on this one. And it looks like I could do roughly, so roughly about 4 contracts here. So that puts my max gain closer to, let's see, close to 800 here. And then on the downside, we have our max loss near 1,200. Now, some of you may say, oh, well, that's not a great risk to reward profile. It's kind of how it always is with credit spreads. And the reason why is because it is a higher probability trade. So you're essentially risking more on the downside to make a little bit less on the upside. But the kicker there is going to be that high probability of you actually keeping that premium, keeping that credit. So let's move back to the trade tab here and go back, adjust this to 4 contracts here. And I'm going to start my price at the midpoint here for the price of the spread. And I'm going to hit confirm and send on this trade and hit send here. Okay, and we got an immediate fill there. You won't always see an immediate fill at the midpoint, but we're just going to kind of start there. And I'm going to look in the questions with the chat. No concern with the bearish harami forming on CRM. So let's take a look here. Now, this is a possible bearish harami inside day, which could indicate a pause or a potential reversal, but it's not considered, we can't call it that pattern until the next trading day. So something that we could do, well, I guess let me back up. So the reason why we can't call it that, because it only counts as that candlestick pattern if we see the follow through for that. So if we saw a down move tomorrow where we kind of pushed lower on the day, that would give us an indication that, okay, that was a confirmed bearish harami or inside day. But right now it could be just be telling us that it's a little bit of pause in the trend, because if we look at the last couple of days in price from just lows to highs that were made, that was a little over a 9% move that took place, nearly a $23 move. So we may just be seeing a little bit of a pause in that trend here. But what you could always do is set an alert, and a level that I may look at is the low of this candle, because if we actually look at some of the short-term levels of where we've seen, we may find this near-term level or near-term zone of support, which we're kind of touching on as well today. But we have had a confirmed breakout move. We did see a break of the move of the moving averages. So it's giving us a little bit of confirmation that the trend could be changing there. But again, it's just taking a little bit of a pause there. So let's go to our next possible setup, and let's look at Alibaba. So Alibaba here, and I'm going to throw on these shorter term moving averages as well so you can kind of see those. Now, Alibaba's had quite a bit of a year. Just recently, it had a strong uptrend, and then ever since the beginning of October, it's had a little bit of a sell-off. So let me know in the chat what type of pattern that you're seeing that is possibly forming here. And I'll kind of zoom in to where you guys could possibly be seeing that. But we've had now 1, 2, 3, 4, 5, 6, 7, 8, 9 days of trading below that near term or below that 20-period simple moving average. So the other thing that it's looking like it's doing, it's flattening out, and it's looking like it's starting to curve down a little bit. The pattern that I'm noticing here could be a possible bear flag that took place. We had about a $33, $34 move downward. And I'm just going to make this a little bit easier for you guys to see here. We had this move downward in price, where that was about an 18% move down in price. We've had a little bit of a rally back up, or a little bit of a consolidation, whatever you want to call it. And it looks like price on the lows of this flag is just kind of tending to touch that 20-period simple moving average. So that may be the price pattern that I may be looking to trade today, and we may be looking close to a break of that possible bear flag pattern. So if I want to take a projection down below, I may just duplicate this drawing, drag it down, and where would it possibly place our profit target or target price for trading this bear flag? Since it's a bearish continuation, that would place it right around that 127 or 128 level, which I'll zoom out again. We can actually kind of see, and I'll remove this one here. We can actually kind of see that that level coincides with where price has been touched a few times. We had a major gap there. We had an island reversal there earlier, I guess this spring. And we've touched that level a couple more times. So I'll just kind of shade that in for us here. That is kind of the support level that I'm looking at. And that's where our price target would end up possibly be kind of taking place here. So I may be looking again for a bearish but high probability setup trade in this case. So that's kind of what we're going through today, is just kind of analyzing our risk, looking at high probability setups on some possible formations that we are seeing. So in this case, I see that volatility is a little bit higher. It's definitely elevated. We do have earnings coming up over the next couple weeks or so. So that's something I want to make sure that we close our option out before expiration if we're going to do that. Now, since implied volatility is a little bit of elevated, I may want to take again another Vega negative strategy and look to possibly sell a bear call spread in this name, with looking at how the trend has been down. It's below the 20-period simple moving average. It's had a little bit of the sideways consolidation, but it may move lower here. So I'm going to look at the trade tab and take a look at Alibaba. And let's take a look at where we could possibly look for expiration dates. So this flag took about 3 weeks to form or so, like 3 weeks. It hasn't broken through yet, and we're not going to assume it's going to be broken through, but we can definitely kind of safeguard ourselves in a couple different ways if this pattern doesn't play out, since we are looking for a high probability, more bearish bias setup here. So we may be looking in the short term, if we're looking to take advantage of that elevated level of volatility, maybe that bearish bias that we're seeing here, we may look at 30 days till expiration and just kind of wait the time out and look for volatility to kind of run its course over the next couple weeks as well. So again, if I'm looking for a high probability trade, I may look for a smaller delta here, or I may even look to see what the implied volatility within the next 30 days is for the stock. And I may even use this number in parentheses, which will give me an expected move of the stock up or down by that date. So this is telling me that the price of the stock could move, based on the volatility, it could move up $21.86 to the upside, or $21.86 to the downside. So if my bias is to the downside and I want a little bit of a higher probability setup, I see that these options have a lot of volume, a lot of open interest. I can look at kind of like outside of that range or near that range for a possible $20 move or so, or just look at the delta here and look at the smaller delta. That tells me that we have only a 31% chance that option is going to expire in the money. So what I may do here is sell the 180. So I'm clicking on the bid there and scrolling down, holding down my control key on the keyboard, clicking the asking price and buying the 187.50. So all we technically need this stock to do is stay below our short strike. So stay below 180 and we keep our premium of $1.42 or $142. Now, we can go through and analyze the risk in this trade again. So I'm going to just a couple of things right. Make sure this date is always the date after your expiration. And let's set our slices to break even on expiration here. So that tells us that our break-even point is at 181.40. The most we can make on that trade by expiration is obviously that credit that we're going to collect of that premium. Our downside is a bit more, which is always kind of how it is on a short credit spread, where we're seeing a little bit more risk to the downside, right around 608 or so. Now, with that price slice again there, it's showing us our probability of profit here on this trade, which is 74%. I kind of like those odds in this case. Now you can even move this price slice and put it where the trade actually plateaus out, and you can see the probability of hitting max profit there on our trade, which is basically just the price basically just staying below our short strike by expiration. So that's a pretty high probability in that case. Now let's just see how many contracts that we could possibly do with this type of trade. If we just bring this down to 2 contracts here, that is still right within our risk parameters, because the most we can lose is about $1,200, and that gives us about $284 to the upside. So our risk is still obviously defined. You have the right to obviously buy the stock at 187.50. You have the obligation to sell it at 180. So that's kind of why we're covered there. And this is obviously just a good way to just visualize your risk on an options trade before placing the order. So I'm going to go back to the trade tab, bump this down to 2 contracts there. And I'll start at the midpoint like I did with my last one at 147. And we are going to hit confirm and send. Everything looks okay. I'm going to hit send there. Now, something I want to do with both of these trades is set a couple of alerts, because I know my risk is defined, but I want to set alerts if it's moving against me. So if this pattern, for instance, even though it was a high probability setup for this, let's say this pattern doesn't play out and price moves above its 20-period simple moving average, that's something that I would want to be aware of, because that's obviously a change in that shorter term trend. So if it moves above that, I don't want to have it get close to my short strikes there. So that could give me an indication of where my risk is defined, or while my risk is defined, I may still want to think about closing out my option if it should go in the opposite direction. So I'm just going to place an alert here and click on the price of the stock, create an alert. And I want to place it on the price being above the, and I can actually do this on many different things. I could place so many different alerts, but I can place this based off of the stock going above 174. So I'm just going to type in 174 here, and it's going to switch this to at or above 174. So that's above that 20-period simple moving average. So that's just one way you could do it. So I'm going to hit create on that one. And then the other one I'm going to go with as well, CRM. I want an indication of price, and I'm going to pull this back up on the 50-day. I want an indication if price pulls back into maybe just this zone here that we looked at before, this short-term support here right around 253, 254. So I'm going to create an alert there right around this support level that we're seeing there. Whoopsies. I'll zoom in here so you guys can see it a little bit better. This support zone that we drew here. So right around 254, because that would just put us a little bit higher than the breakout of that descending resistance line of that descending triangle. So I'm going to place this alert, creating an alert when price is at or below 254 to give me that indication there that price may be moving in the opposite direction. I'm going to hit create there. So there are two different kind of setups there for trades that we made. And I see a question in the chat, is there an exit for CRM? So because our risk was defined in both of these trades because they are spread trades, I didn't place an exit quite yet. I just wanted to place a couple stock alerts to see if our bullish thesis in this case doesn't seem to shake out, or in the other case, if our bearish thesis on BABA didn't tend to shake out. But our risk is defined. We are still risking well within our risk parameters of the account, which was about $1,300 or so. So that's just why I didn't put any profit taking orders on that or stop losses on that spread, just because we're defined there. Now, a couple other things that we could look at and a couple other ideas. I'm going to take some of these indicators off of the chart. These may be some ideas that we can cover next week. But Walmart was actually a price pattern that I saw break out the other day. We had almost like this cup and handle shaped pattern, but this cup also at the same time was an ascending triangle. And then now, ever since that move that we saw from that resistance break, we are seeing a little bit of a flag pattern taking place. So this could be something in the short term to just kind of watch as a possible bullish continuation pattern in Walmart that we're seeing there. So if we take this flagpole, put it on the possible breakout point of that descending resistance line of our flag, that could give us some upside targets north of, I guess, 116 or so, if that should play out there. So that's another pattern that I'm watching there for a break. And then as far as Netflix, we saw something else today. So we saw a little bit of a support break here, and I'm going to draw this all the way back to May. But we saw a support break here, and you could consider this a range break or even a descending triangle in this case, where we had almost like a failed breakout to the upside and then gapped down below support. So however you want to look at it, but let's just take a measured move of what this range could look like here and where price could be headed. So if I take the top of the range to the bottom of the range there, that is about $118 move. So if price broke support and we are projecting that to the downside, that could put us right around 1030 or so, which is actually this level of prior highs from February. It's quite a little bit of an arguable zone there, but that could put us by that level, by that measured move. And because it's been in a range pattern for really, 3 months or so, it could take 3 months to get there, just looking at kind of the time that it's taking to form that pattern. So those are a couple patterns that I'm watching for this week. And yes, so looking at the chat with a question from Dina, when alert is triggered, do you close the trade or reevaluate the position? I'm going to reevaluate the position because I don't know what the price of my spread is going to be when the price of the stock gets there, because I don't know how fast the price of the stock is going to get there, whether it's going to get there tomorrow or in 2 weeks. And that's where we can just kind of look at even analyzing our possible price scenarios on that analyze risk profile tab and just kind of going out and seeing if the stock hits or goes down $5 within the next 5 days, what would my price of my spread theoretically be? Now, if it goes down $5 in the next 3 weeks, what will the price of my spread be? So that's why I'm just setting those alerts to just, in this case, reevaluate those positions for right now. But we did cover a lot today, showed you, we went through an overview of the indexes. We went through just checking up on our old trades from the previous weeks, a couple winning, one losing. And then we went over some new trades, just using high probability setups here, testing out our bullish and bearish theses. We showed you how to analyze the risk on that trade to make it a little bit easier for those of you that are options traders that are like a more visual sense of analyzing the risk. And then lastly, we just showed you a couple new price patterns that traders may be watching to possibly trade in the next few days, coming weeks or so. But I just want to thank everyone for your time today, for tuning in. If you did like this webcast today, please give it a like and please subscribe to our Trader Talks channel on YouTube. And thank you so much for, I know Barb was in the chat today. Please give her a follow on X at Barb Armstrong CS. I'm at Rachel-CS. Like we did today, we both post some charts on X there with a lot of price patterns. And stay tuned for the next webcast that is coming up next, which is Getting Started with Thinkorswim with Cameron May. Thank you and see you next week.